Thanks a lot, Eric. You didn't leave me a whole lot to talk about, but I'll try and work through the wrinkles on it. As Eric said, I'm Scott Drever, and I'm President and CEO of SilverCrest Mines. I think I have 10 minutes to do this, so I'm going to try and do it pretty much all in one breath. The inevitable disclaimer, which just cautions you not to rely on anything I say or anything I show you. Eric was perfectly correct in terms of the importance of the people in our particular organization, and I guess probably in most organizations. The principals, myself, Barney Magnuson, and Eric Fear, we've had a lot of experience in the business. This is the third junior company that I've managed to get to cash flow. This is the Santa Elena Mine is the fourth mine that Eric Fear has been involved in, either in a production sense or a construction and production sense. And Barney has financed a number of companies through to production. We've all had a lot of experience internationally in a variety of different roles, and so we're quite capable and able to do what we're doing now. We've got a good board of directors that support us on the compliance side and make sure that we're doing things in a properly orderly fashion. Quick look at the company itself. We have two major projects. One is the producing mine of Santa Elena in Sonora State, Mexico, and we have the Hoya project, which is coming on stream, or I'm sorry, is in advanced stage of exploration, with our expectation that it'll come on stream in a while. Our 9 months, our financials for the year end will be out in mid-March, but for the 9 months ended September, we had 52 million in revenues. We had cash flows of almost 30 million, or 33 cents a share. Our earnings were 17 million and 20 cents a share in earnings. We have at the moment about $45 million in cash, and we're cash flowing about $3 million a month out of Santa Elena. So from a financial perspective, we're in a great position to be able to do what we're doing. The resource base that you see there is under some serious revision. We have a program at Santa Elena that we think are going to develop or double the resources and the reserves that we will have for a 10, probably 12 to 15-year mine life now. 107 million shares out, 114 fully diluted. The principals and board of directors hold about 8 to 10% of the fully diluted position. So we tend to take a shareholder's view on most of the business things that we do. We act as prudent shareholders rather than perhaps just managers of a company going forward. You can see the stock chart on the bottom right-hand side there. We've had the ups and downs as everybody has had in this business, but we're seeing that we are probably the last one to retreat in a downturn and probably the first one to start to recover when recovery starts to show up. So we've been fairly stable, and we're trying to obviously break out through that bit of a barrier there at 280 to 290. The Santa Elena project is, as I said, our producing property. It is well located. We focus a lot on logistics and location, access, those kinds of things, simply because it's easier to do and it's cheaper to do, both from a CapEx point of view and from an operating point of view. So Santa Elena is about a 4-hour drive south of Tucson. We're 2 hours northeast of Hermosillo, and we're 7 kilometers off a paved road. And those attributes were instrumental in us being able to bring this project on stream for under $20 million. Our hard CapEx was about $15.5 million. We had $4.5 million in there for working capital, which we didn't need because we were cash flow positive almost from the outset. It's a straightforward, at least this phase, we're doing it in 2 phases. First was an open pit heap leach, which is a standard process of mining, crushing, putting on the heaps, and recovering and pouring doré on site. We're particularly high grade for an open pit heap leach, and The second phase will be to put in a 3,000 ton a day conventional mill, which will allow us to increase our recoveries from about 35–40% of silver up to 70% of the silver, and on the gold side from 70% up to over 90%. So we'll get a big bump once we have this mill in place in January of 2014. We think it'll probably double those our current production of about 35,000 ounces last year and of gold, and 570,000 ounces of silver. So we expect to take it up to about a 4 million ounce silver equivalent by 2014. And when I talk about equivalents in this particular project, it's simply a conversion of gold to silver at either a 50 or 55 to 1 ratio. We're in the low cost end of things. I think our costs are just under $8 a silver equivalent ounce. If you think in gold terms, then that would be about $400. So that's really competitive. We sold silver last year for around $31 and netted out on our gold at reasonable prices as well. We have an expansion plan underway at Santa Elena. As I said, we're putting in a conventional mill. The underground phase is underway, well underway. The decline is down 1,200 meters, and we can access the reserve as it is. This just shows you how tight an operation it is. The pit is like 200 meters from the crusher, and the dumps are about 500 meters. So it helps to keep the cost down. That is a production profile based on a PEA that we did in 2011. We're shifting that production a little bit. Some of the higher areas will push off into the end and flatten that or even out the production at about 4 million ounces of silver equivalent. This gives you a little idea of where we are. The light pink is where we expect to expand the resource. We're bringing the red line into reserves for the underground process, and it should be documented in a 43-101 reserve revision and pre-fees by April of this year. Oh, and we've also, the main zone that we've been mining in the open pit, we've extended it, as you can see there. The yellow areas are 2 new zones that we've discovered below the main zone. So, and we're seeing some really high-grade bonanza stuff there, up to 30 grams of gold and over a kilo of silver in some instances. That's pretty much it for Santa Elena. I want to touch on a project that we have in the pipeline called La Hoya. Here again, logistics and access are excellent. It's about 100 kilometers from Durango, in a good geological area. The Sabinas mine and San Martin mines there in the southeast corner have been there for 300 or 400 years, and it's pretty similar to what we're looking at La Hoya. It's a series of flat-lying beds that have been mineralized with vertical, subvertical structures. And we've had 2 drill campaigns in there now and released a resource estimate of over 200 million ounces of silver equivalent at a 15-gram cutoff. We are looking at that makes this deposit a huge deposit. There's also 75 million pounds of tungsten involved in the area as well. We are looking at a high-grade starter pit, and we'll be doing that in a preliminary economic assessment, hopefully to be done by mid-year. That'll give us parameters on capital costs and operating costs. For an open pit, that would be, about 3.5 ounces of silver equivalent. In this case, the equivalents are gold, silver, and copper. So we'll know what those economics are by mid-year, and we're pushing that forward quite quickly. In a regional sense, the red area that you see there is what we can purchase for $4 million, 100% subject to a 2% royalty. And the targets, the El Pino and the La Paloma, are targets, airborne targets, that are very similar in respect to the La Joya deposit that we're working on now, and we'll be drilling those off. I'm out of time here. That gives you a sense, I think, of what SilverCrest is about. We do have a booth outside, and we're around all next week with the PDAC. So please come and see me for additional details and further discussion. Thanks again.